Today we'll be covering money and risk management in just a little bit more detail. Hello and welcome. My name is Joseph Barrington-Lew. Remember, when you buy a share, always assume you've made a mistake until the market tells you otherwise. I'll explain this shortly. After nearly 10 years of helping frustrated beginners and experienced traders understand the importance of correct money risk management principles and use them, I felt there had to be an easier way. Feedback from friends and colleagues found books on the subject too difficult to follow or put into practice, and this still is the case, in my opinion. After a few more years of study, listening to and having long discussions with many traders and many bottles of red later, JBL Risk Manager was launched. Since its release in 2000, it has helped many traders around the world limit their losses, protect their profits, and monitor their trading performance. These are proven strategies that do work. I'm sure you'll find this presentation of interest and useful. Thank you for your support. More than 80% of traders lose money in the share market. In fact, there are two major reasons. Firstly, it's because they have no idea about the correct rules for money or risk management. And the second is it's too hard for them to sell in a losing position and admit they were wrong. So doesn't it make sense to do the opposite of what the majority are doing? Of course it does. Some of the best traders in the world only get 50% of their trades right. In other words, they only make money 50% of the time. The difference is successful traders exit immediately when the evidence indicates they've got the trade wrong. And when in profit, let the market signal when to get out and not their friends or emotions. After buying that share, always assume you have made the wrong decision unless the market tells you otherwise, because the chances are you probably have. It'll be easy to sell and close that losing trade if you feel you made the wrong decision in the first place. Or, I've made 100% profit on this share, I'm not greedy, I'm getting out. What this trader is actually saying is, I'm afraid of losing all my profits, or if my friends find out I could have made 100% profit and it then went down, they may say I was too greedy. These traders can't wait to tell their colleagues how well they did recently, but never talk about their losses. What we need is a trading system or a list of rules to follow and the discipline to act on them. Now, there are four components to a trading system. There's your entry strategy, which is what and when to buy. There's your trade sizing strategy, your exit strategy when you've got it wrong, and your profit taking strategy when you've got it right. As shown earlier, there are four components to a trading system, and all four components must be in place before making that trade. Here are some examples explaining why. You have $20,000 to trade with, so you buy 20,000 shares of XYZ company at $1 a share. You have your exit price, where your stop loss set that if the share price drops 10%, in other words down to 90 cents, you get out, and it does. Remaining trading capital $18,000. Problem here was there was no trade sizing strategy. How many shares do I buy? Your second trade, once bit twice shy, they say. You are now a little more cautious and only buy 5,000 shares of ABC company at $1 a share. But it goes up to $1.30 or up 30%. You decide that's great profit, I'm not greedy, and sell. How can you lose taking a profit? I've made $1,500, you tell your friends. This is great, you think. But you lost $2,000 on your first trade. You're in fact down $500 to $19,500. No trade sizing strategy? No one share should feel better or worse than the other. The share either fits all your entry rules or it doesn't. Don't get personal. No profit taking strategy? Don't let your emotions tell you when to sell. The market and your exit and profit taking strategy will do that. Who knows how much higher it may have gone. After 10 or 20 trades, this can get out of control and hard to manage. Let me demonstrate to you my simple money risk management system. Money and risk management are very important. if not the most important issues that must always be addressed by anyone seriously considering trading the markets. They cater for the preservation of both your initial and accumulated trading capital. You may already have a great system or set of rules to determine what to buy, but if your method of money management is clumsy, you will lose money unnecessarily. Once buying that share, your role is no longer as a trader, but as a risk manager. At some point in time, your trading system will meet a drawdown period, a losing streak. And if you don't know what to do, you will lose your feeling of control and try to desperately trade your way out of this crisis. Many people feel despondent and abandon a perfectly good trading system, or give up trading altogether with large profits still to be made. As a trader, you're destined to fail without proven money risk management rules. Managing the capital in your trading account, controlling the risk it is exposed to, the size of each trade, together with entry-exit strategies are all prerequisites of any money risk management system and successful trading. Capital management is the understanding that the percentage gain required to recover from a loss increases geometrically. If you lose 15% of your capital, you would have to make 17.6% gain on the balance to get even. However, if you lose 30% of your capital, it will take 42.9% gain on the balance to recover. A 50% loss on your capital will take 100% gain on the balance to get even. I hope you understand the importance of capital management. ATR, average true range. ATR is a volatility indicator. Volatility is the distance a share price moves over a nominated period. The true range is then calculated by determining the maximum distance or range a price moves either today or from the previous day's close to the extreme point, high or low, reached during today's trading. Therefore, the true range is defined as the greatest of the following: the distance from today's high to today's low, or the distance from yesterday's close to today's high, or the distance from yesterday's close to today's low. Average true range, ATR, is the average of the true range over a nominated period of time. Average true range. Why use average true range? Suppose the average daily range for a share is 20 cents, high to its low. And it's been like that for the last 6 months, but due to interest, media, speculation, or for whatever reason, this range increases to 40 cents, 60 or more. If you use traditional technical stops, such as support lines or moving average crossovers, you may exit the trade a little early, or if the average daily range drops to 10 cents, you may exit a little late. I recommend using an 8-period ATR for medium-term trading, as I do in the program, JBL Risk Manager. It's just a little insurance against a change in volatility. And what I'll do now is show you the difference between an average true range and one that's had a moving average applied to it. This is the 8-period ATR, just above the chart. Now what I'll do is I'll apply a 10-day moving average to that indicator. And as you can see, it's certainly a lot smoother. There's not as many spikes in the indicator, and I found it to work far more effectively. So what now? How the market's treating you? That's great. Well, we'll help you do better. JBL Risk Managers covered all these areas and more. It's now available and you'll profit by using it, provided the correct rules are in place and you follow them. Contact your local agent to order a copy today, or why not trial it? Now, if you'd like a free 14-day trial of the program,
simply enter JBL Risk Manager into Google or go to www.paconsulting.net.au. You have nothing to lose and so much to gain. It's also available from Paratech worldwide, and other resellers are also welcome. Now that's all for now. Any comments or suggestions are always welcomed. And thank you for your time. And remember, plan your trade and trade your plan. I wish you all trading success.